Man, it feels good to be back. TTMTrades, it's been a while, but today let's talk about stocks. Man, I got a couple of picks I want to talk about. A few stocks I've been looking at. We'll talk about the current trade that I'm in right now also. But let's just jump right into it. First one I've been looking at is Boeing, ticker BA. Now, as you can see, I have three different charts up on my screen. Okay, and the reason for that is for multiple time frame analysis. All right, right here we got the monthly to the right, weekly in the middle, daily to the left. Okay, understand each time frame builds into that higher time frame. So not only will we get a micro perspective to the left, but we will also get a macro perspective to the right to see how we're building into the overall picture. All right, so ticker Boeing. All right, now Boeing, I like Boeing's setup. Okay, as you can see here on the daily chart, we have been consolidating in this window from December of 2020 all the way to now of August 2nd, 2021. So for about 8 months, Boeing has been consolidating in this tight price range. Okay, now just looking at Boeing overall, on a week-to-week basis, each candlestick representing 1 week of data. We are creating higher highs and higher lows. All right, higher high, higher low, higher high. And now we kind of been trending downwards and possibly for a bounce here to create another higher low with a higher high. All right, so we are trending upwards. So there is some accumulation going on in Boeing back down at these price levels. Okay, now Boeing has took a beating. All right, you had this first drop off COVID February 2020. Everybody remembers that. Okay, but one of the key things to look at with Boeing, even though it had that hard hit because of COVID and then everything that was going on with their aircraft at the time, with all the bad news circling them, you had this strong sell-off. All right. Now, as you can see here on the monthly chart, each candlestick represents 1 month of data. All right. You can see here, as soon as it hit the yearly charts, 150 SMA, this yellow line right here, if you've been following me for some time now, then you know how I feel about the 150 SMA. When it hit that 150 SMA, you can see that there was clearly some accumulation for what, 1, 2, 3, 4, 5, 6, 7, 8, 9 months until finally you get the breakout off of that 150 SMA above the bottom one standard deviation Bollinger Band on the monthly chart with a test of the middle BB, and now we're currently in a consolidation cycle to where we're slightly pulling back, which is what you see here on the daily chart, all of these up down swings without really going anywhere. Now, what am I looking at for Boeing? Boeing is starting to gain some steam here on the monthly chart and on a week to week basis. Now, the risk to reward is beautiful. All right, if we look at Boeing, all right, what is the risk if we enter Boeing? Preferably, I would love to enter Boeing back down here where, excuse me, I would love to enter Boeing back down here right around this 174 to 175 range, right where you see this bottom one standard deviation Bollinger Band kind of lining up with the 150 SMA. All right, now, do I think we'll get a pullback all the way back down to these lower price ranges? I highly doubt it. Okay, but that is for wishful thinking. If you want to be patient and kind of wait to see if you get a pullback back down here to the mid 170s, that'd be the perfect entry to make on Boeing. Okay, because that would further increase your risk to reward ratio on Boeing. All right, so you got about a, what, we're looking at 232 down to maybe 175. So you're looking at maybe a $50 drop. Okay, realistically, do I think that's going to happen? No. I do think we could possibly get down to the lower 200s on this monthly chart where you can see that bottom candlewick last dip down at, and that was down in the lower 200s. So even if you can get down in the lower 200s, all right, from 200 all the way up, the risk to reward is quite high. Okay, let's say you get in at 200, the stock dips down back to that mid 170 range where the bottom one standard deviation is at. Then you're looking at a 30-point spread from 200 down. Okay, but the reward is if you get in at 200, say the price dips back down in that 200 range on a month-to-month basis, then your reward from 200 up to this middle BB, that middle BB is sitting right at 256. All right, so that's about a 50-point spread to the north. And then if you can get up to this top one standard BB sitting here, currently sitting at 335, now you're looking at a 130-point spread to the upside on Boeing, which would align with this area of consolidation before Boeing sold off. Now, if you get the spread from 200 back up to this 335 to 340 range, I would probably close my position out right in that range. And why is that? I talk about it all the time. All right. The reason is because this is a large area of supply. Okay. If I take this rectangle and I bring it all the way over, okay, this entire area of consolidation from January 2018 all the way up to January of 2020, there's a lot of investors and traders who are currently holding shares in this area. And if Boeing, where the demand is currently pushing Boeing to higher highs and higher lows, once that demand pushes it back up to that 330 range, right at the bottom of this consolidation right here, this 2-year consolidation, you can expect a large amount of supply to get dumped onto the buyers that are buying in, because these people will want to break even on their shares that they're holding and want to close out their position. So they're waiting to just dump their shares on this next leg up. All right. So again, long story short, we're looking at Boeing possibly getting in lower twos, riding this up to 256, maybe right around 330, close out the position due to this large amount of supply right here of shares that's going to be offloaded once it pushes back up into that range and get that spread. So ticker BA is on the radar. Next, what we're looking at is First Solar. I like the way First Solar is set up here. Again, daily to your left, weekly in the middle, and monthly to your right. Now, if we look at the daily and the weekly, again, we can see that the daily is consolidating right around 150 SMA, which is the weekly chart's middle BB, as you can see here. We've been consolidating around that price range. And you can see that we've been bouncing right off around this $70 to $75 range. There was some buying interest in that range, and now we're kind of in this consolidation period. Now, if you look at it on a weekly, you'll say, man, you know, First Solar had this strong run up from $30 up to about $110 that started in March all the way up to August. So about a 5-month run. All right, it looks a little overextended. Yes, it was definitely overextended, which had this pullback. But what I think on a more long-term macro basis, this leg is consolidating to start its next leg for a higher high. Okay, you got to understand we are in the Biden administration. They're real big on solar. You know, the infrastructure bill includes solar. So solar as a whole is a good long-term investment. Okay, now looking at this, this looks like a very extreme run, right? Even if I slide over and bring the daily, this leg on a day-to-day basis, mind you, this is the daily. This is a very long, extended leg. Nice bullish run, right? A lot of people missed it. Those who are on the sideline waiting, they finally got this pullback. They're starting to accumulate their shares in this area because they missed this initial leg. And now they're starting to take First Solar a little higher, breaking out of this consolidation cycle. And the demand is beginning to pick up. All right, as you can see here on the daily, we're consolidating. Lower Bollinger Bandwidth. Bollinger Bandwidth is lower than its average. Right, volatile cycle, breakdown, consolidation cycle, tight. Breakout, volatile, back in the consolidation cycle, and we should get another volatile cycle after that. Remember, I always say volatility moves in cycles. All right, so it looks like we're going to get another volatile cycle, and as you can see here, the PMO is picking up momentum to the upside. So it looks like this volatile breakout will be to the upside. Now, again, going back to what I was initially saying, I believe we're starting to head into the second leg of First Solar. All right. And now looking at this, when we zoom out, again, this is First Solar on a month-to-month basis. If you look at First Solar, the risk to reward on this is crazy, crazy, crazy. Okay. Just on a month-to-month basis, looking at the bigger picture, when First Solar pulled back, it hit the yearly chart 150 SMA, which long-term investors love to buy in right around that 150 SMA to 200 SMA. All right. You look at the 150 SMA to 200 SMA long-term, they're off from one another by a little bit. Okay. But they love to buy down in that range for more long-term invest and hold strategies. Okay. So what do we want to do? We want to lock in when the market makers are locking in into these companies, and then we want to ride that wave long term with them. So this is the perfect time to get in, because as you can see here, First Solar has been in a consolidation cycle from July of 2012 all the way to now of July of 2020. This is an 8-year consolidation cycle for First Solar, where it's just been swinging up, down, up, down, up, down, staying within the same range. Finally, you get the breakout of this 8-year consolidation cycle. There's your breakout. Boom. That's the first breakout leg. You get the pullback on the yearly 150 SMA, which is where long-term investors like to lock in. You see the buying coming into play. You get the bounce off that 150 SMA. And now on a month-to-month basis, we're sitting in that top 1 standard deviation Bollinger Band, which I call Zone A. Zone A. Zone A, Zone B, Zone C, Zone D. All right, if you've been following me for a while, you know what I'm talking about. If not, you will soon enough. All right, but we are in Zone A, which shows that we could be possibly heading into a strong uptrend. When I say Zone A, when I look at the weekly chart, broke out in the Zone A and it held strong uptrend. All right, so that's what I mean when I say Zone A. Now, looking at this, look at the risk to reward on this. Where is that level of supply that we can possibly push into for First Solar? Well, you can see this was a large consolidation cycle right here, and this is where your first level of supply is at. All right, I don't like this line being red. We're going to change the color of that to white and thicken it a little bit just to further drive home our point. We'll do a 2-point thickening. All right, so your first line of supply is right here. All right, this is back in 2008, 2009, okay, this consolidation cycle. So here's your first level of supply, right? If we bring this over, you'll see, right, that first leg up, it hit that level of supply that's all the way over here. All right, again, what do you think happened? People who've been holding on to these shares for quite some time probably offloaded their positions to break even, which causes level of supply right here on a month-to-month basis, which got you that first dip. First level of supply here, as it pulled back, here's your first level of demand right around that lower $70 to $75 range for First Solar, where long-term investors came back in and started buying. All right, now we're going to start this leg back up. What is the spread? All right, so the spread is your first level of supply is sitting right around 103. First Solar is sitting right around $94. All right, so from 94 to 103, not that big of a spread. You're looking at about a 9-point spread. All right, from 94 back down to this level of 75, you're looking at about a $19 to $20 spread. All right, so the risk to reward, the risk is much greater at this point. Okay, but what do we need to see? All right, myself personally, I need to see this $85 to $86 range hold. If for any reason we pull back in $85 to $86 holds, I even go on a limb and say $75, right? If 85 to 80, let's put it like this. If $85 to $86 hold on a pullback, then that lets me know that First Solar is about to go into an uptrend and start its second leg upwards, all right, on a month-to-month basis. If we lose 85 to 86 and pull back into the lower 75, your risk to reward, the reward is much greater, because now you're locking in at that key level of support and you're taking it from 75 back up to that 100 to 103 zone for a $25 to $28 spread. Now, what's more beautiful about that is, right, if we look more long-term, the upside reward is much greater. If First Solar is pulling back off of this first level of supply, meeting this first level of demand, and is breaking back out, all right, and you don't get the pullback, if First Solar gets above on a week-to-week basis, if it breaks above 95 and holds, I would lock in. All right, because on a more long-term basis, at the top of this consolidation cycle here, at the top is sitting right around 170 to 175. All right, so you could possibly get a spread from $90 to $95 up to 175, which is about a 75 to 80 point spread on your money. All right, so First Solar, long-term basis, we've already hit that supply area one time. Shares offloaded, we pulled back, instantly ran into that demand zone on a month-to-month basis, and now we could possibly be going on that second leg to create a higher high with First Solar. Now, If we zoom in on a micro perspective, right, and looking at the weekly and daily, okay. If we look at the weekly and daily, if we look at the weekly, when the RSI pulled back, it held above 50, right? One, that's very bullish. Two, it broke back above both its averages to show that the speed in which the stock itself is beginning to pick up, the RSI is showing that it's greater than its averages. All right. So we can see that this is starting to break back out. All right. If the weekly chart breaks out, as you can see here, the PMO has pulled back to show that first line of supply, but it's beginning to curl back up to possibly show that momentum shifting back to the upside. All right. Now, how do we know if the weekly is going to break out? Well, if we take a look at the daily, again, very bullish. Daily, is it above this 150 SMA? Yes, it's above the 150 SMA. Is the weekly above its 150 SMA? Yes, it is. Is the monthly above its 150 SMA? Yes, it is. Anytime you are above your long-term averages, you are setting up for a long-term uptrend. And if you look at the daily, right, we went into this consolidation cycle because we hit that supply zone on the monthly. Here, looking at that on the daily, here's that pullback we talked about due to that supply zone, right? You get these volume spikes to show buying, interest down in these levels. As you start to see the momentum pick up, the PMO crosses back over. We're in a consolidation cycle, like I said earlier, and now we're about to go into a volatile breakout cycle with the daily moving up into zone A to start that upward leg, which will then reflect into the weekly and then reflect into the monthly, starting its next leg up. So First Solar is on watch. And let's see what else. Hood, Robin Hood. No, not Hood. I don't want to talk. Robinhood, I'm not really messing with right now. I would only mess with Robinhood if you're doing intraday quick swing trades, which we're not talking about that right now. Coinbase, all right? Now, we can't really look at Coinbase on a very macro level, right? Because there's not enough data, all right? So we do have to zoom in on a daily, 2-hour, 30-minute chart, all right? Daily, 2-hour, 30-minute, all right? This leg right here, now I was looking at Coinbase and I saw that it was consolidating in this range from 218 up to 254, right? Dip, run up, dip, run up, dip, and then bam, the Bollinger Band started consolidating around that level. You can see the Bollinger Band width lower than its average, and then we finally get the breakout with the Bollinger Band width breaking above its average. And you can see here the RSI is constantly holding above its averages. So it's showing you that the momentum's picking up as it bounces off its averages. Boom, you get the breakout. All right. Even on a day-to-day basis, if we look at these, we can see that momentum is building up and breaking out. If we wanted to zoom in on a macro perspective, you can go down into the 30-minute chart. This small leg here from 227 up to 282. 30-minute chart points this leg out on a much more quicker basis. All right. You look here. You get the pullback on the 30-minute chart. Each candlestick represents 30 minutes. PMO crosses over to show momentum building up. Price action, is it above its 150 SMA? Yes, it's above its 150 SMA. So even on an intraday trading basis, Coinbase is bullish. All right. We dip down around that 150 SMA. We start to build up that steam. You see the PMO crosses over. You get the signal early, right around 237 to enter. All right. On a 30-minute chart, 237 is back down in this area, and then you get the day-to-day breakout. So I'm looking at Coinbase on a more long-term, not long-term basis, but I think it's set up right now and it's starting to break out on a day-to-day basis. All right, now just looking at some upside potential. Its last high was sitting right around 430. I do think we can get back up into this 300 to mid 350 area, which we will test. We might get a little pull back because what's in this area? Supply. There's a lot of supply in this area. When Robinhood first hit the market, a lot of people jumped in, buying. Not Robinhood, excuse me. Buying. Coinbase sold off. So there's still a lot of traders and or investors. I won't even say investors because they're more long term, but there's a lot of traders who are holding shares in this area. So as you start to push back up into those zones, you will see these traders dump off their shares to try to reposition themselves in the Coinbase. And you might get a supply right around that 300 to mid 350 where you pull back, meet you another demand zone, and then take back off. So we are watching Coinbase. All right. And then last but not least, what I am currently trading is Bank of America, BAC. All right. Inflation is creeping up at a nice, slow, steady pace. And the banks can profit from this as long as inflation doesn't move too fast. All right. Now, looking at this. All right. Month-to-month basis, monthly chart, weekly chart, daily chart. All right. Now, we see that Bank of America had this strong leg run up here on a month-to-month basis, each candlestick representing a month. We kind of got the signal early on the weekly chart here back in this consolidation window when the weekly chart went into a consolidation cycle. As you can see here, from here to here down in this area, consolidation cycle, price action moving sideways, band constricting, breakout cycle here. Get the volatile move to the upside, and then the price action pulls back and it's starting to consolidate again. All right. Now, where did it pull back to on a month-to-month basis? It pulled back right above its top 1 standard deviation, which is in zone A. As soon as you pull back, you started to see some demand come in, and now it looks like Bank of America is possibly going to start its next leg up. All right. And it has been slowly trending upwards. All right. Now, where do I see Bank of America going? Now, right now, I'm taking a very short-term trade on Bank of America. This isn't a long-term play. I have a 1-month call option on Bank of America. And I did not take that signal based on the monthly chart. All right. I did take that on a more micro intraday perspective. But I just want to give you a macro perspective of where we're possibly at. All right. It looks like we're bouncing off that top 1 standard deviation on a month-to-month basis and could be starting another leg upwards. But I am holding Bank of America on a micro signal. What I mean by that is I took a 2-hour signal. All right. Now, when Bank of America began pulling back, we followed this leg downwards. Once it hit that 150 SMA, I love the 150 SMA. All right. I see that we immediately found some support, and then we was just consolidating on top of it, consolidating on top of it. Now, as I seen us consolidating on top of this level, I said, you know what? Let me zoom in on a more micro perspective. And let me see if we're starting to get any early signals. So then I drop down to the 2-hour chart. I'm like, all right, let me see if we're getting any early signals. Are we above the 150 SMA? No, we're not. Okay. So that shows me on an intraday basis, we are on a downtrend, which we are. As you can see, the PMO on a day-to-day, we're trending downwards, which is in the overall bigger picture. It's not a downtrend. It's just a pullback. All right. In the bigger picture, we're just pulling back, slight pullback. In a micro perspective, smaller picture, this is a downtrend. This is a leg down. All right. Now, zoom into the 2-hour chart. I'm looking. One, are we finding support in zone C and D? All right. Zone C and D, zone A, zone B, zone C, zone D. Excuse me. If the price action is finding support in zone C, that bottom 1 standard deviation Bollinger Band, then that lets me know we've come out of the downtrend. All right. And we are now consolidating and possibly break out to the upside. Now, we was not finding support in zone C or D. We was finding resistance in zone A and zone B, which tells me the price action is in a downtrend. If you look here, breakthrough zone C, zone D, gets a nice dead cat bounce. Rejection in zone A and zone B. Pull back, another dead cat bounce. Rejection in zone B. Another leg down, run up, rejection in zone B. But when we pull back now, we're finding support in that zone C, that bottom 1 standard deviation. So now what I'm looking at is, one, is this downward leg consolidating? Yes, this downward leg is beginning to consolidate. We're going in a consolidation cycle, low volatility. 2, is the momentum beginning to pick up to the upside? Yes, the PMO is starting to cross over and pick up to the upside. 3, are we finding support in that bottom 1 standard deviation? Yes, we are. And next, is the RSI holding above its averages? Yes, we are. All right. So when I started looking at this, I saw that ticker BAC had this nice little jump here on a day-to-day basis. I said, okay, I'm going to wait until we pull back on 150 SMA on the daily chart. Once we pulled back on the daily chart and tapped this 150 SMA right here, I made my entry on the 2-hour chart. All right, right here. Once I made that entry and I seen that the bottom 1 standard deviation was acting as support, we was in a consolidation cycle. The momentum was beginning to build to the upside. I went ahead and took a 1-month call option on this trade. and I want to take this trade up to $42. All right, because I believe ticker BAC will not start its next leg up until we break above $42. Monthly chart to the right, weekly chart in the middle, daily chart to the left. All right, there's a strong area of resistance sitting at 42 on all time frames. All right, if we mark right here where that top 2 standard deviation Bollinger Band is, it's currently sitting at 4168. We'll say 4168. We'll just say 42, rounded up. If we look at that 42 area on a daily chart, that's where the top 2 standard deviation Bollinger Band is sitting at. That's where the top 1 standard deviation Bollinger Band is sitting at on the weekly. And that's where the top 2 standard deviation Bollinger Band is sitting at on the monthly. So both, well, not both, on all 3 charts, daily, weekly, monthly, we have a strong line of resistance based on the Bollinger Bands telling us the volatility of this stock over the past 30 days to 30 weeks to 30 months is sitting right at 42. All right. So we're just going to take this 1 month option up to 42. Like I said, we entered right here on this 150 SMA dip. Then the following days, we've been having a nice, strong run up. So currently, the last I checked, I think I'm up a little over 105% on this trade. I didn't make a real big entry. I think it was like, took like maybe only 4. Took 4 contracts. So not a real big position because, again, I took this trade on a more micro perspective. All right. But again, on a more macro long-term look, if we hold above 36, this top 1 standard deviation Bollinger Band on a month-to-month basis, and this 36 is support, and we bounce off this 36 like we're doing right now, and we start another leg up, then I would look at Bank of America on a more long-term basis and buy some more long-term options as we begin to head back up into these price ranges of 45 and even $50. All right, which will take some time to get there. But that's what I'm looking at right now. If you got any questions, if you disagree or agree, or you got any tickets that you're looking at, please leave them in the comment below. Leave a thumbs up. Till next time, I hope all of that made sense. TTM Trades, I'm out.